annual results, an opportunity for me to spend time with you and talk about the performance for the year. On an annual basis, bank standalone, our profit after tax is at 3,412 crores, up from 2,091 crores previous year, which is a 63% jump year on year for the full year. And on a consolidated basis, it is 4,940 crores, up from 3,459 crores, which is a 43% jump for the full year. So both at the bank standalone and at the consolidated basis, we've had an excellent year, recording a growth for standalone at 63% for the full year and for the consolidated at 43% for the full year. And friends, this is the time when I want to touch upon something which I've discussed with you earlier. This year we have seen a dramatic improvement in formalization of financial services, which is leading to significant growth in the financial savings situation in the country, and which you can see reflect in various numbers of ours, including in our CASA numbers, which are now at 44%, and our CA and SA have had a very good growth over last year. SA well in excess of 40% growth, and CA in excess of 20% growth. So we see the formalization of financial savings as a significant benefit to the entire financial sector, and we are obviously seeing that as significant benefits to us. We are also seeing the early signs of pickup in the loan growth in the last quarter. Therefore, while for the full year our loan growth is 15%, if you look at the last quarter on an annualized basis, it's clocked at in excess of 20% per annum, 5.3% for the last quarter, which on the standalone basis, which gives you a growth in excess of 21% annualized. This is a positive trend in terms of the loan growth as well. And I actually also see the year as we go ahead, we've been able to look at our history. We've been able to maintain very decent margins on our NIMs, which for this quarter have been 4.6%, amongst the highest in general in the Indian banking scenario on a NIM basis. And as we go into the next year, we believe that the entire area of the banking stress, which has been an issue in the banking sector, for us, we have now completed the full cycle of the stress which we got out of our ING Vysya acquisition, and we have come virtually to the end of recognition of that stress as of March 31st, 2017. And fortunately for us, we've had no issues of any special reporting based on any regulatory requirements at all. So we go into the next year with a sense of confidence and a reasonably strong momentum, both on the liability and asset side in banking and across financial services. You will get a chance, friends, to also look at our numbers in various subsidiaries of ours. The most prominent of them is Kotak Securities, which has registered outstanding growth in the fourth quarter, and it's about 121 crores PAT in the fourth quarter compared to 84 crores in the third quarter, and more than double of
51 crores previous year.
In the last year, same quarter was 51 crores. So our entire suite of financial services subsidiaries are beginning to show significant traction, helped of course by more favorable capital markets, which I'm sure we hope will continue as we go forward. So with that, Jamie and Deepak, you want to add anything, or we will open up for Q&A? There is no special hiccup in this quarter. You go back to a disclosure we made in the first quarter after ING Vysya acquisition, where we had disclosed to the markets that the total stress on the ING Vysya book is about 6% of their loan book, which is about 2.5% of the combined loan book. We said that Some of those loans have already become NPAs. Some of them are what we consider as having some degree of stress, and down the line, based on assessment of inherent weakness in many of those loans, we have fully recognized that. Therefore, if you look at the total ING Vysya book, our original assessment of about 2.5% being the total stress has effectively flown through and got fully recognized through this year. And if you notice our credit costs for the year have been about 61 basis points, which includes standard provisioning of about 6 basis points. Therefore, net of that, it's about 55 basis points. And if you compare the credit costs for March 2017 versus March 2016, March 2016 was total credit costs of about 80 basis points, 82 basis points, which has come down to 61 basis points. And our view is going forward, we would essentially say that the trend, the declining trend which we have seen from 16 to 17 is something which we would see as our assessment is that the trend would broadly continue.
Would you like to give us a guidance on
Yeah.
Just to follow up, will all the slippages, all the fresh slippages in this quarter could you specify?
Yeah. We cannot specify specific accounts, but broadly, that is what it is.
And the number?
We cannot give, the gross number is something consistent with the 2.5% number, which we assessed as the total stress of the ING book in June 2015.
Can you give us
We have given the number. Our total GNPA has moved from 2.42 to 2.59. And let me again make it clear, it is not the so-called famous cement account which you seem to be talking at every press conference. We have no exposure to that so-called cement account. Yeah.
Would you like to give us a credit cost guidance or a range?
Which is what we have said, that if you look at March 2016, the credit cost was 82 basis points. For March 2017, the credit cost is 61 basis points, which shows a declining trend, and we believe the declining trend should continue.
You had mentioned about the integration of retail book. So has that been complete because the results here show healthy growth?
Yes.
So the integration is over and
Integration is over, and as Uday mentioned, some of these we had mentioned last year itself, that this year we will see consolidation of all of that. The integration is more or less now complete. The retail book was more really on the branch side, the liabilities part of the business. I think that part of integration also is complete really.
so from here onwards we'll see more of
And you're starting to see that in the quarter already.
Yeah.
This quarter itself reflects a lot of that already.
And a lot of the growth on the advances side this period has come from the retail side.
How
Whether
much
it is
is the retail book?
if you look at the different aspects, the business banking grew in the quarter by about 7.5%.
So that's annualized 30%
Yeah, the CVCs grew roughly by about 12%.
for the quarter.
For the all quarter, not annualizing,
Yeah.
it's for the quarter. You look at small businesses, that was another 10% growth. So a lot of growth has come from the non-wholesale piece in this quarter.
What is the total stressed percentage?
2.59 as
That's
we
the
know.
gross NPA, right?
Yeah. Net would be about 126.
No, the NPA plus restructured plus any.
We have-
Very, very small. If you look at my, the total restructured would be somewhere around 102 crores, and the total SMA2 is another about 130 crores.
So that has gone down as
Yeah,
That's right.
it has gone
It's
down.
gone down
That's right.
significantly.
Therefore, if you look at our SMA book, SMA2, and again, as some of you may be aware, we are the only bank which reports SMA2 on a quarterly basis. None of the other banks do. And we are now, for this quarter, the SMA2 number is
About 130 crores.
130 crores, which is 0.1%.
So was there any S4A or S4A?
Nothing.
None.
No S4A, no ARC sales, nothing. That remains.
We do not sell any loans to ARCs.
So total stressed is about 3% or
Less.
even
Much
less?
less.
Because to the extent of provisioning, you got to start with net NPA, no? So net NPA is 1.26 plus restructured book 10 basis points, 8 basis points.
8 and 10 maybe.
8 basis points restructured book, and 10 basis points is SMA2. And SMA2 is 61 to 90.
Yeah. No, I was looking at the gross number.
So if you add all these three, it is a number which is 144 basis points total across everything.
Did you see a pickup in the last quarter as far as Phoenix ARC is concerned? If you could run us through what that looks like.
Yeah, Phoenix, as you know, we are a significant shareholder. I'll have Deepak speak about it. So they've had some pickup on the purchase side, but as you know, as a philosophy, Kotak Mahindra Bank does not sell any loans to any ARC. Okay? Yeah, Deepak.
So we did not sell any loan to the ARC, but they've been in the market, and yes, there have been a pretty healthy flow of transactions.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.